Depending on what side you're on. So it's good time, of course, for home buyers if you can find a loan, but a tough time all around for sellers. Take a look at this now. The average home price in January of 2006, $221,900. The average home price at the end of 2009, $172,600. So in today's snapshot across America, we are looking at the real estate market in 3 U.S. cities. Joining me from Hampton Roads, Virginia, Dorcas Halfon-Browning, a realtor with Coldwell Banker. In Chicago, Juliana Yeager, a realtor with RE/MAX. And in Las Vegas, Juan Martinez, also a realtor with RE/MAX. Thanks so much, guys, for being with us. There's so much to talk about, especially when we put numbers like that on the screen to see the disparity between the average home price over the last couple of years. Dorcas, I want to start with you because I know you're in an area that has a very high military concentration. People there are using traditionally FHA or VA loans. You still have a lot of problems where you are, though. Tell us what the headline is out of Hampton Roads.
Well, the headline for Hampton Roads is we are actually in much better shape than the rest of the nation. Unemployment is below 7%, and there's good inventory. Inventories are beginning to shrink a little bit. Buyers have moved into the market to take real advantage of the first-time buyer tax credit, and folks who never thought they would own, due to low interest rates and plenty of inventory, have entered the market.
Yeah, well then why are we reading about some of the sellers, at least, who are offering some pretty interesting incentives for people to buy their homes, like giving away plasma TVs or throwing them in, or kind of anything they can think of to get their house sold?
Well, it's competing for the buyer's attention today. Sellers are understanding for them to move and move up, they need to compete, and to compete, they're being very creative. They're trying to draw attention to their home, staging it well, making sure that they sell within that 90-day time frame so they can move up and take advantage of the other tax credit.
So exactly who is buying right now? We know about first-time home buyers because they're getting some tax credits, of course, that we've been talking about for a while. Other than that, what are you seeing?
Well, folks need to move. They are thinking maybe it's time to move rather than remodel. I can get more for my money. It's an opportunity to move to a different location.
Are people really doing that? Because we're hearing that people are taking the actual opportunity to remodel now instead of move because of all of the costs.
Well, it depends on their motivation and their inventory. If they run the numbers, they're looking at some things, it's easier to remodel. You redo that kitchen, it's beautiful, and all of a sudden the bathrooms, even if you remodel them, they're not quite big enough. Or you'd like something different. And there are first-time buyers out there who are willing to come in, buy your home, and allow you to free up that equity and buy another home very well priced that has those amenities.
All right, Juliana, let's get to you in Chicago. Who do you see that's buying right now? And we talk a lot about credit and whether or not it's going to free up for the average American. What's your take?
Well, we're absolutely working with a lot of first-time home buyers, but the planning as far as financing goes, buyers are planning a lot better these days. They're saving more than ever. They're meeting with the mortgage professionals early on, and they're buying within their means. They really want to make sure it's something that they can afford, and they're taking the right steps to do so. And as far as lending goes, all of our buyers are definitely able to get financing these days, but again, they are putting the money down. They're taking advantage of the low interest rates and staying within their means.
All of your buyers are able to get loans?
Yes, we're actually been very fortunate with that, but it takes the right steps.
So what are some of the problems that Chicago is seeing?
Well, there are some foreclosures scattered throughout the Chicagoland area, and we do have quite a bit of inventory. But as far as foreclosures go, I don't think that they make up the majority of the inventory. What we're still seeing is some of the sellers have a misconception of what their home is worth. You really need to be...
Yeah, that's always the case, isn't it? I mean, people always love their home better than pretty much anybody who's going to walk through it and consider buying it.
But if you are on the market right now and you are, a realistic seller trying to sell, you need to know the the sold comparables that are out there right now, and you have to be priced in line.
Yeah, so you joined the real estate industry back when it was sort of at the height of the boom. You've seen, a couple of really tough years, to say the least, but you're sticking with it.
Absolutely.
What do you talk about amongst yourselves when you're not on TV about some of the challenges in real estate right now?
There are a lot of challenges in real estate, especially, being in the industry as a realtor. You have to go above and beyond for all of your clients because it's tough times out there. There's a lot more marketing dollars. You've got to educate your sellers and your buyers. You want to make sure they're making the right investment on the buy side. You're helping them on the sale side, educating them if there is the accurate price point to sell we're helping them do so. And you have to stay optimistic. It can be hard with all of the doom and gloom that's out there, but you have to stay strong, you have to be optimistic and stay positive. And I think that both buyers and sellers really appreciate that.
Yeah, Juan Martinez, I want to get to you now in Las Vegas, because we've talked about Las Vegas for a long time in all of this. Foreclosures are very, very high there. How's it affecting the market now?
Well, 2009 was a record number. We had 48,000 transactions that happened, which was our record year in sales. And the problem is that we don't have any sellable inventory. We have probably over 10,000 approved buyers, first-time home buyers ready to go, but they can't get in because of all the offers that are coming in on the few inventory that we have. There's just too many offers, and they're getting beat out by the investors.
Well, what does that mean? What sort of a snapshot is that? Does that mean that there are properties out there that people can't really afford to sell because they can't get the money that they put into the home?
The majority of the transactions that happened in 2009, the sellers were bank-owned properties, and very few equity sellers and few investors flipping properties. So the majority were bank-owned sales, and that's what's attracting the investors, the first-time home buyers, the owner-occupieds. The issue is that 45% of the transactions that happened in 2009 were sold to cash investors. And the issue is now is that a lot of the first-time home buyers, whether they're trying to take advantage of the tax credits or the NSP funds or whatever opportunities there, and very low down payment or down payment assistance programs, they can't get in because of the bidding wars that are going on.
So you're saying basically if there was more stuff available, then you'd have even more transactions, as you call them.
I think in 2009, if we had more inventory, we probably would have hit easy 60,000 transactions in